Hey everyone, President Brent here with our Trader User Group weekly market roundup. This is for the week ending June 6, 2014. We've had a very interesting week, just a very explosive rally across all sectors and across, excuse me, across all indices. What you see on the chart here is the E-mini S&P 500 futures. You can see we pretty much pegged a key Fibonacci level here at 1948.88. It's an extension using previous pivot highs and lows. What I did was I kept it very narrow, very tight, and I did a pivot low there and a pivot high there, and it gave us this very tight range right here. And this is kind of where we stood. You can see that we briefly held up there. We were here for almost a week, and now we only stayed there for really a day, and then boom, we just banged right up to the 1948.88 level. So now the question is where to from here? Well, I do believe we're due for a little bit of a pullback. Of course, everybody's been saying that. My own positions for our members, we've been basically long. We've been long positions, but we have not been in very heavy. I think this huge run up that we had that started about the middle of May. What we really got steam was exacerbated by a couple of good economic reports as well as interest rate decisions out of the ECB. Now, we had a really good play on that with the euro. We had fun with that one. I love trading these currencies in anticipation of some of these events here. But you can see this is where we're sitting right now with the E-minis. The other one that really just took off, which is a very strong bullish sign, is the Russell. You can see on the Russell right here, we clearly got escape momentum. You know, as you've seen for the past couple of weeks, I've been talking about we've been making lower highs all the way down and lower lows all the way down. We finally reversed that trend right there when we made a higher high. Well, let me just get this thing. When we made a higher high there from that one right there. And then we came down and we formed a low there, but it was a higher low than that low there or this one right there, which was good. And then we proceeded to come up and make a higher high here, which took out that previous high there. So that is the makings of a new established trend in this direction. We're still early in it, but this is a definition of a trend, higher highs and higher lows. And you can see where I was talking about that area or that zone of confusion there, and we were right down on our support point right there at around 1080, 1078 to be exact. And now we had this clear movement here. And the Russell has a lot of catching up to do to get back up to this top right up here. So this is where we're sitting right now, and we knew that if we were going to take out this prior pivot high here and then this one here, it was just going to go really quick. And that's what it's done. If we look at NASDAQ, let me get the NASDAQ futures on here. You can see with NASDAQ, we've now made new highs. NASDAQ had the same issue that the Russell did. You can see with NASDAQ, although the NASDAQ has been performing a lot better than the Russell for the past several weeks, but you can see the lower lows that the NASDAQ futures made. And then we finally reversed that by making a higher high right there from the previous pivot high right there. And then we came down and we made a low, but it was a higher low than the previous pivot low. And then we proceeded to come up. We spent about, I'd say about 2 or 3 weeks trying to take out that pivot high there. We finally did right in this area here, and then boom, we shot up and we made a higher low and a higher low from each of the prior pivot lows. Folks, that's a classic trend, right? And that was the reversal in the trend. Now, I had said that we went through this whole process here. The Russell, we need to follow very closely to see if we can do the same thing. If we can, everything is going to take off. And we made new highs in the NASDAQ, which is extremely bullish. Now, we do have a large separation in the DI positive and the negative, and as you guys know, especially our members, we get a snapback, which typically is to be expected, which would mean we're probably going to come down and test this lower area right down here, gather a little bit of momentum, and then move back up. Short of any bad economic news that'll trigger that, that's what I anticipate is going to happen. Now, the one other thing that I wanted to talk about tonight for this past week is volatility. Volatility just, I mean, it just fell off the table, folks. It hadn't been this low since 2007. All right. Here's where vol is right now. This is a daily chart. And you can see the range that we've been in, which was serving as support, but then we came down and we took that out right there. This over here on the left-hand side of the screen at 11.05 was made in March of 2013. We took that out with this low that was made right here. And we haven't had this kind of low right here since going all the way back to 2007. And I'll show you, I'll just bring this in a little bit, and you can see just how dramatic this is right here. If I were to just extend this line right here like this and come right in that area there, right? And then highlight that area right there, that is in March of 2007. That's how low volatility is right now. This is a daily chart. I've kind of scrunched it down. Folks, I will tell you, can it go lower? Sure, it can go lower. But the odds dramatically in the favor of having a volatility pop up in this direction. Now, this was our zone here of support before, and we only stayed below it for just a few days here. And then we really were just intraday here, and now we've been below it here like this, and now we're down in this area here. So vol is favored to pop back up. That's why I'm telling all of our members, okay, we still want to be long, right? But we want to make sure that we've got some reserve cash on the sidelines. We do not want to be all in. You'd be crazy to go all in right now. No matter what the markets are suggesting here. We are playing to the long side. Don't get me wrong, but we're light on the long trade. I'm just going to extend this out just a little bit more here. Let me just extend the shaded area here so that you can just see. This is about where we are, and I'm going to extend it out. I suspect we're going to be back up into this zone back up here. I can't tell you when, obviously. We're down. I mean, volatility closed Friday at 10.73. Folks, that's low. I mean, that's very low for vol. Options are very cheap right now. Credit spread traders, you're going to have to hold back a little bit because there's just no premium in the options. And the odds do favor volatility, like I said, to at least pop back up to this area right there, which would be a movement of a couple of points. Now, we've got a couple of really great trades our members are privy to that we're running in volatility, and it's doing very, very well. We're looking to at least double, minimum of 60%, but double this thing every year. So for those of you that are members, we're going to go over it in detail this Sunday night. Now, another one that I wanted to show you here is the treasuries. Here is bonds. Bonds actually had a very bearish day, and I'll tell you why. You can see right here, I'm going to blow this chart up and just extend it a little bit so it kind of exaggerates the candle movement. But you can see here with bonds, if I highlight the candle, you can see that we open and close down at the bottom down there, okay? And all this movement up here, it tried to carry it higher, but bears just pushed it back down very quickly. That's why I just don't believe bonds up in this level. I just don't believe them. I think everybody knows, unless you live in a cave, that interest rates are going to go up. The issue is, when are they going to go up? And how long can interest rates stay relatively low now, which means bond stays up in this area? If we back out just a little bit and I come back into these zones here, I am still a bear in bonds. And I do believe bonds are going to be somewhere in this area here, maybe even down to the lower section down here as we get through towards the end of 2014. I do believe we still got one more pop left. You know, one more pop like that. And that second pop, for those of you that are not in bonds or not short bonds, would be the time to get in. So that basically means we're going to be a seller on rallies. Intraday, we are a seller on rallies here as well. So that's a little bit about the bond market. Now, the other one that we had a lot of fun with was the euro. The euro, you can see here, we took this to the downside. We had a nice signal and we traded this short. Right in that area there, and we rode it all the way down to that area there. Now, the euro really didn't move much. You would think the euro would have, on an announcement of reduced interest rates and negative interest rates for banks, it would have come back down that area again. But I think a little bit of this was a little bit of, here we're going short on the rumor, and then we're buying back on the news. But I do believe it's going to peter out, and we're going to roll back over again. So there's going to be some more opportunities for our members here in this one. If you're not a member, I'd highly encourage you to come on in and check us out. We've got a new monthly membership option that I would encourage you to take a look at. It includes one free one-on-one session with yours truly. That would be me, and I think you would find it very enlightening. All right, everybody, it's a very quick, fast summary. Going into next week, keep in mind this is triple witching this month, because we got it's quarterlies, monthlies, futures. We got everything expiring and rolling out. So I think the markets, the momentum is probably going to start to the upside on Monday. What'll be a tell if we're going to get a little bit more of a pullback is if it moves up initially in the morning and then starts selling off a little bit. So otherwise, have a really great weekend for our members. I'll see you Sunday night. For our non-members out there, I would strongly encourage you to check out our special offer for the monthly deal. I think you'll really like it. Have a great weekend, everybody, and I will see our members this Sunday night. Bye now.